Okay guys, I'm going to do a quick update of my Vanguard, but also talk a little bit before I show you that about the world of investing in general. You see, I did a video recently on generational wealth, where if you put a little bit away every week, it'll build up to give you something greater in the future. And had the comments and the messages, but what if it goes wrong? But does it really go wrong that quickly? Not really. Not if you're looking at a lifetime of saving, because that's what you're doing. And the stock market has traditionally outperformed any savings account over the generations. It really has. And a good example of that is the S&P 500. Now, the S&P 500 is an ideal barometer of world thinking and whether or not index funds are working, because it is the gold standard, if you like. Now, inside it, it has the Magnificent Seven, which holds about 40% weight of that fund. Now, the Magnificent Seven are the 7 best companies of the 500. Now, they change quite a bit, and I've seen some changes radically over the years, which is why when people talk about the AI bubble and things like that, I don't really subscribe to it. Now, I've been in and around the markets for 20 years. And the reason that I don't subscribe to the AI bubble burst is very simple. When the dot-com bubble came, it was, if it had .com on the end of it, they chuck some money at it. John Smith Sheds.com. There's some money. Is that built into your everyday life? No. But AI is. And what will happen is the bigger companies will survive, but the smaller ones will slip away. So the AI bubble might be the small companies just disappearing, but the actual concept of AI will be here forever. And the ones who actually get hold of it and invest in it will become too big to fail. And that is why I'm picking on the S&P 500 and the Magnificent Seven, because they are the big companies. Now, years ago, the Magnificent Seven was traditional bricks and mortar companies. Now the technology companies, the Meta, the sort of Google and Microsoft and Amazons of this world, those that have embraced technology, whereas it used to be things like FedEx and Coca-Cola, traditional was. The profit margins between them are completely different. Bricks and mortar, very small. Technology, huge. So will this bubble burst? No, I don't think it will. Not in the traditional sense. But even if it did, and it went catastrophically wrong, and everyone talks about the 2008 crash, if you stuck to your nerve, you would have been fine. Same with my fund, which I'm going to show you. I was told to sell this a couple of weeks ago. And everybody who's an armchair pundit was like, oh no, you're doing it wrong, you've got to sell it because of the troubles in the Middle East. Well, America's at war. Wars don't last forever. But when they do, there's always a time of prosperity after it, because there's rebuild, reinvestment, all different types of thing. We have political upheaval. Now, anybody who's watching the UK from outside the UK, or even if you're in it, will know that the UK is nothing short of a circus at the moment, because our political establishment is, well, nothing short of a joke. Now, I could go on to political rants, but I try not to, because you do have those on the left and you have those on the right. But again, that's what drives economies, because you've always got changing governments, you've always got changing ideas. Now, that means taxation will come into it. Sometimes taxation's high when it's on the left side, and it's low when it's on the right side, because one believes in socialism, the other one believes in capitalism. This is what makes the world move. Now, once you get over the fence and you look at the broad stroke and the big picture, you will also realize that governments rise and fall all the time. So what is the common denominator? It's an index fund. It doesn't care who's in government. It will just keep plodding along. And if you're looking at a 20-year horizon, how many governments is there going to be? it will swing from one side to the other. So don't get hung up on it. Just let it do its thing. And that's the beauty of an index fund. They just grow. But let's have a look at the blips in history. So if we looked at the S&P 500 today, everyone was crying because it has dropped. But really, if you looked at the scale here over the last this is a monthly chart to go back in time, is that really showing signs that this is over? No, it's had some historic signs. Now, if you do trade and you understand the market, there is also what's called the flush out principle, which is where it will zoom up high and then there'll be a massive profit taking. But if it does happen, sort of like here, it dipped down. It only dipped down for a very short period of time. So it started selling in the March. It was over in the April. So you would only have held 6 or 7 weeks worth of pain before it started uprising again. Same here, 2 months worth of pain. Then it upped. Now here, when we're going back to sort of when it was going COVID time and all of that sort of thing, and the markets were having a bit of a rocky time of things, in and around that period as we came out of it, it's 22 to October. Okay, so maybe it's 10 months worth of like hardship. But if you were looking over the long term, if you sold this here, you would have missed out on all of this because of panic. Now again, we go back here. There's 2020 when COVID was really kicking in. So it started in sort of 2019, which was here, fell sharply, but look at the recovery. Then here, as we came out of the other side of it and all of the bills had to be paid. There was that. We can go back. In the UK, there was a blip around 2015. Didn't really shock the markets, did it? The big one that everyone talks about is 2008. Well, let's go look at that. Well, there's 2008. It started in and around this area here. It was over come March 2009 and then never looked back. You can go back even further. There you go there. There was a period 2000 to 2002. So it's a 2-year flat line going down. Now, if you held your nerve at this point here, that went right the way down to 798 as a fund. But if you held on to this and you never really worried about it, and we're talking generational wealth, well, that's now 7478. That would have tripled, quadrupled, added, and made a fortune over the course of that 15 to 20 years. This is what I'm driving at. If you're looking at these things and thinking that you just want to get in and out of the markets, then you're going to get caught in what's called whipsaw. And the whipsaw is the movement of the market, because the markets will have opposing positions, profit taking, and then some kind of destabilization, whether it's war or whatever. But ultimately, the trend will win out. And in an index fund, the trend is normally to the upper side. So if you're looking at long-term growth, hold your positions, hold your investments. Now, if you're coming to the end of the time and you see it starting getting a bit shaky, in other words, like me with mine, what I'm showing you, I'll be starting to move it from what is essentially steady Eddie to high risk to low risk when I'm 60, 4 years' time. But if it goes wrong, I know looking at history over the last sort of 25, 30 years, even if I've got it wrong, I've only got to wait about 18 months, 2 years most, and I'll get it back to where I need to be. In investing terms, that is very, very small. So let's have a quick look at my fund and we'll update it. So let me just drop that back on. Let me just quickly find it. I need to log in. Give me a second. Okay, so that's better. So let's flick this over. So I'll just quickly pull up my spreadsheet that you watch me do. So currently it's 233446, doing really well. So I've smashed the goal that I wanted for the year. But what you've got to remember is if it does get caught in a hard time, this could wipe off 25 grand here quite easily. But as long as I end the full year on 200,000, that means I'll have increased the fund roughly about 30. I'll be happy with that because I know everything I put in will grow. So this week is 3.3 growth. I did skip a week last week because, as you can see, I might be a little bit tanned. I've just come back off holiday, so had a week off last week. But let's have a look at the real fund itself. So there we are. So there's a year. There's a few bips in it, but it's not bad. But it is running incredibly high. And if we look at this, there's the contributions, what I've put into it this year. Now, that's from my other income streams because I do this as a living, and I have done for a very long period of time. Now, month on month, what we'll see, it's not always a bed of roses. As I was saying in the monologue about taking losses, but holding on to them in investing terms, you can ride it out. If you're in sort of day trading where you're in and out the markets within a day, you shouldn't really be holding your losses. You need to kill them off relatively quick. But in this scenario, it's a different kettle of fish. So 10,000 quid loss last month. Not rate, well, it's nearly 11,000. I never panicked, but a lot of people did. But it rebounded very quickly the week after. Likewise, down here, had 2 months where both of them were a bit naughty. Not good. I mean, if I take this back, say, another year, so if I go to June 24 and we flick that in, there you go. So we'll put into this roughly about 100 grand over the last couple of years, and it's returned 50,000 over the 2 years. Because what you got to remember is at that time it only had 80,000 in it, but I've been adding into it. And then those ads and I do what's called redistribution. I don't take the dividends. It goes straight back into the fund. It's now building up massively, very quickly. But look through this. So loss. 3 months of losses here. That's pretty naughty. All right? But I held my nerve. Loss. This is what I'm driving at. Hold your nerve and you're fine. Now, if you look at the transactions that goes into this, they're not big. You know, quickly just add these things in over and over. Okay. All right. I said I was going to put a lump in. There it is there. And then it comes down. They're not big. I'm drip feeding over and over. And that drip feeding has now made me, well, we are £63,000 gain from the 1st of April this year. I think that's phenomenal. I will go with that every single week of the day. So that's the update. And what I'll say is just stay the course and you'll be fine. Little steps will make a big journey. But if you keep turning back, you'll get nowhere. Have yourselves a good one. See you soon.